All right, let's take a look at America's credit card bill because we're talking about potentially another round of stimulus and another round of all sorts of other problems given the situation we have today. Here we have the federal budget deficit, and that's the official numbers. And the big problem with this number is that it counts the what's happening at the account. It doesn't count a lot of things that the government is promising, and I'll get to that in a second. And if we look at the definition of the official budget deficit, it says the difference between the total amount spent by Congress. Notice it says spent. It doesn't say any future promises or any future liability that it's taking on with the passage of different laws and the revenue received by the Internal Revenue Service, right? And right now that is currently running at 2,600,000,000,000 and some billion dollars. A good way to visualize some of these numbers is to think about how much per U.S. citizen that is, right? So we have a population, it says over here actually, 329,614,962. So if you divide that number by the population, I'll let you figure out what that is. But all of these deficits add to the national debt. If you look at that number, it's increasing by about 100,000 every few seconds, right? Again, it's very hard to comprehend what 25 trillion means, so it probably is helpful to look at how much per citizen we got. Per citizen, it's 75,000, but remember, we have a lot of children, a lot of retirees. Per somebody who actually pays taxes, it's more like $200,000, right? It's like a mortgage, right, for everybody in the country. That's a mortgage for a lot of places in the United States. Maybe not here in Seattle. If you're like me and you muse about getting out of the United States and living in a cheaper country, that's retirement for a lot of second world countries right there. Right? You could buy a house and retire in a lot of second world countries for that amount, right? But our tax revenue, take a look at that number. That's the tax revenue per year. I believe they measure this as a rolling year. So I'm recording this on May 7th of 2020, and I believe this is measuring the last 365 days of how much tax revenue we've collected. Look at that downward trend. Not only that, but if you look at the spending side of things, we're collecting 3.5 trillion, but we're spending 6.7 trillion, almost double, and hence why we have a budget deficit that's about. See, I remember the last year of Bush when we had all the bank bailouts and we had $1 trillion budget deficit. The reason I remember it being $1 trillion was that I tried to visualize just what $1 trillion would look like. At the time, I liked to collect Eisenhower dollars because I remember thinking that there weren't that many made, and you could almost corner the market in them, and you could buy them for just barely over face value, sometimes at face value. And I remember thinking what $1 trillion of those guys would look like, and I tried to visualize lining up 1,000 in a row by another 1,000 in an open field, right? And then stacking those 1,000 by 1,000 coins, 1,000,000 coins high, right? I remember it would be the size of Burj Khalifa. It would be a skyscraper. And then I also remember that there wasn't enough copper and nickel in the world to make that many coins. I remember researching that, and there wasn't anywhere near enough metal and I'll get to the metals in a second. And so there we have it. That's the budget deficit, but that's not all of the future debt that the government has racked up. We'll get to that in a second, and it breaks down how much of that revenue is from income tax and how much of it is from payroll tax. So next time you get your paycheck, although you probably won't be getting one in the near future, it will probably break down how much is being collected for Social Security, how much for Medicare. Those are payroll taxes, right? Although if you're employed, right, your employer pays the other half. If you're self-employed, you generally pay double the amount. If you're employed by somebody else, they pay half of the Social Security and Medicare tax, and it usually doesn't show on your pay stub. I wish they would show it. Our taxes should be a little bit more transparent so people know what they're paying for, right? And then there's obviously corporate taxes and tariffs for goods that are imported into the United States. All of these are shrinking, right? Let's see which one is shrinking fastest. Obviously, it looks like income and payroll taxes, right? Obviously, income taxes also apply to capital gains, and there's going to be a lot of capital losses this year, right? So, I believe in recent times our government has been spending about 3 to 4 trillion a year, but we're recording this in 2020. We just passed the CARES Act where we spent 2 trillion and possibly more, right? Okay. And so that's the government's debt. Let's look at some of the household debt down here. So right now it's student loan debt. It's kind of interesting because this would be growing a lot faster if we didn't freeze on the interest on federal loans, right? So part of the CARES Act was that there would be no interest for and no payments for, I can't remember the exact details, but for at least as long as the crisis is going, right? And if you look at how much interest the federal government is paying, let's see if that shows on here, interest on the debt. It is increasing a lot more steeply than a lot of the other expenses because if you think about a few years ago when I was looking at this chart, I believe I looked at this about 10 years ago, this number was actually shrinking. And part of the reason was that the U.S. used to have a lot of long-term debts, right? When I was a kid, you used to be able to go to a bank and buy treasury bonds, and they were very colorful, if I remember correctly. I wish I had bought a few of those, not because I think treasury bonds are a good investment, but as a little bit of a collectible, right? They no longer printed on paper. But so in 2010, there were a lot of treasury bonds, 30-year bonds that were issued in 1980 that were expiring, and then they would be renewed in 2010, right? In 1980, the interest rate was 21%. So we finally paid off a 30-year mortgage at 21%, and we got a new mortgage that was at 2%, right? And even though the debt was exploding in 2010, right, we were running trillion-dollar budget deficits, if I remember correctly. A lot of it was getting refinanced at lower rates, right? Well, fast forward to 2020, we have a lot of short-term bonds nowadays, right, compared to a number of years ago. And even the bonds that are expiring in 1990, the interest rates were not that high, right? Interest rates have been creeping up in recent times. I know the Fed has made emergency cuts, but it's going to take some time for the bonds that are issued after the emergency cuts to be the main bonds that the government is owing, right? If I remember correctly, even 20 years ago when we were running budget surpluses, it was going to take a long time to pay off all the national debt because we had a lot of long-term bonds, right? If the government tried to buy back a 30-year bond early, it would have to go into the open market to buy it back, and it could end up paying a premium for them if it really insists on buying them back, right? It's kind of like if you have a mortgage, it might have a prepayment penalty, right? So what you see on your mortgage statement might not be the amount it takes to actually clear that mortgage, right? You might have to because the bank is expecting a certain amount of return, right? You might have to go onto the open market to find somebody else who will take over that mortgage if it were, right? That's what the government would have to do, right? But getting back to the student loan debt, I think it would be a shame if people actually didn't pay anything for the duration of the freeze, right? Because they're getting 0% interest. This is a good opportunity to actually to accelerate the rate that we're paying it off, if you can, right? So also, credit card debt is believe it or not, shrinking, right, compared to student loan debt. And that's because here in the United States, student loan debt is not dischargeable in bankruptcy, right? A lot of that is not actually people paying it off, right? As you can imagine, a lot of it is being discharged in bankruptcy. I'm not sure if how the filings are working nowadays, because a lot of the courthouses are probably closed unless it's really crazy, right? You got to have like a serial killer in order for the courthouse to even listen to you now, right? Probably. I'm not sure if some of these are online filings or something like that, right? You would imagine a lot of it is electronic nowadays, and they're just imputing what's going to happen over the next couple of months, right? To give you an idea of how much the banks are profiting off of the debt, right? This is how much the banks are receiving in interest from the loans. Right? Let's see if we can get the exact definition of that. Bank interest received. U.S. commercial bank revenue from interest, right? From your credit card debt, from your mortgages, from your student loans, right? And this is how much the banks are actually paying people who hold accounts at the bank, right? Savings account, money markets accounts, interest, right? Take a look at that spread, right? 827 billion versus 152 billion dollars, right? And a lot of the money supply is actually coming from the banks, right? When you use your credit card, right? For example, I have a credit limit of a few $1,000s. If I were to max that out and I went to Walmart, the Walmart would immediately have that money in their checking account to spend, right? Before I even pay off the credit card debt. That's part of our money supply, right? Let's take a look at what the money supply is. Very little of the money is actually created by the Federal Reserve, right? Most of it is created by commercial banks. M2 money supply, right? And it's actually broken down. M2 only counts, I believe, accounts that are less than a certain amount, and we'll see why in a second. M2 consists of M1, that's the money that the Federal Reserve creates, plus savings deposits, small denomination time deposits. And the reason for that small denomination is that the FDIC insures deposits up to $250,000, right? So everything up to $250,000 in your accounts is part of M2. The reason for that is that it's much more liquid than if your money was not insured by the FDIC, right? About 10 years ago, Cyprus had what's called a bail-in, right? Everything that was under the insured limit, a certain percentage of it was taken to bail in the banks, right? To keep them solvent. And that created a host of problems, right? And so it's an interesting statistic to keep track of M2 as opposed to M3, right? With M3, you have like risk involved, right? And the money supply, this is the money supply in 2000, 4.7 trillion. Today it's 17.4, right? So I encourage you to think about prices relative to 2000, right? So a lot of things have not gone up by that factor, right? That's a factor of about 4, right? If you think about it, house prices or food prices, they haven't gone up by 4, right? And that makes sense, right? Because as technology improves, you would think you could build a house for a lot less, right? You would think a lot more land would be habitable, right? You could grow a lot more food with less stuff, right? Unfortunately, at the same time all that technology was happening, we increased the money by 4 times, right? Unfortunately, most people are overall debtors, right? And if we allowed things to get cheaper on their own because of technology, that would be very painful to repay, right? And I'll let you think about the implications of that. Here's an interesting statistic, Treasury dollars. So Abraham Lincoln in 1862, as well as JFK in 1963, they both signed some executive orders to issue dollars from the U.S. Treasury, which are interest-free, right? We don't have to borrow them from the Federal Reserve. And as time went on, a lot of their dollars expired in one way or another, right? In 2000, we had 3.5 trillion of those interest-free dollars in circulation. Today, there's about 788, and that number just shrunk a little bit, right? It looked like it ticked a little bit. What's really crazy is look at this guy over here, currency and credit derivatives now. Let's take a look at what all that means. Derivative or credit default swap is a credit derivative contract between two parties, right? So imagine that you have some credit outstanding, right? You're holding a mortgage note, and you're buying some sort of insurance in case that there's a default on that mortgage, right? Well, it might seem sensible, except that you realize that defaults don't happen. If you buy car insurance, right, well, the odds of you crashing your car and your neighbor crashing his car are pretty much independent events, right? But when you're insuring credit, right, people tend to default all at once, right? Just look at our credit cards, right? Nobody's paying off credit card debt right now, right? When we have so many people who are unemployed, I'm going to get to that. Nobody's paying that off, right? Those are defaults that are causing credit card debt to be reduced by, it looks like 100,000 every few seconds now. And what's really crazy is that it could be even worse, right? Because right now oil prices are artificially low. They were negative a few weeks ago, and right now our use of oil is also very low, right? I'm starting to worry about the gasoline in my car rotting in the car and causing damage, right? I got to go drive at some point, even if it's just to circle the neighborhood, right? Because nobody's using oil, and when that starts to pick up, we're going to have that on top of all the other problems that we have, right? On top of the interest on the CARES Act that we have to pay for, right? Household assets per citizen, 437,000, doesn't go very far, right? Especially relative to all the other things that we talked about for how much debt we have as our share of the national debt, right? And also, I wish this page would show how it's being distributed and what kind of assets are being involved here, right? A lot of that is probably the homes, right? And obviously that's not going to go anywhere, right? People need a place to live. Let's see. U.S. personal debts include all personal obligation, mortgage debt, and consumer debt, car loans, and short-term revolving credit card debt. A lot of that debt is disappearing, unfortunately, because of defaults, right? What about the assets? Oh, come on. Yeah, this page is not very well designed because you cannot click and then scroll up. Let's see, assets. Total national. I want household assets. Assets include real estate, financial instruments such as deposits, stocks and bonds, life insurance, and pension funds, right? Well, a lot of that is somebody else's obligation, right? So we'll take a look at some assets that are not anybody else's obligations in a second. Okay, let's look at the population. We have 329 million. The workforce, how many are unemployed right now? Officially 38 million. Actual unemployed 40 million. I'll get to us in a second why that miscounts a lot of things. Take a look at this number. The full-time workers, 114 million. Big problem with that number is that if you actually dig into how they calculate it, a lot of people have 2 or 3 jobs that add up to 40 hours a week, right? I fall into that category, so I know what it's like. But the problem is that they count. If you have 2 jobs that add up to 40 hours, they count both of those as full-time jobs. See, they count jobs, not workers, if I remember correctly. And unfortunately, a lot of people fall into that boat nowadays, right? Because basically they want to count what can contribute to full-time work. Let's see if they actually spell that out here. I've dug into it more, but I don't know if they spell it out here. Full-time workers are persons who usually work. Look at that. They've even cut the number of hours that by the definition for full-time work, right? 35 hours or more, right? I mean, you could argue that, because of technology, people used to work 80 hours a week, right? 100 years ago, right? During the Great Depression, unemployment numbers were probably measured by if you worked less than 60 hours a week, right? But if you're going to compare historical records, some adjustment has to be made to that number based on some kind of living standard, right? And I'll let you think about if that's a fair calculation to be made. But you certainly shouldn't be counting the same worker multiple times, right? So remember that money supply, and then look at median income in 2000. This is not adjusted for inflation. We used to make 30,613. We now make 34,010. Remember, the money supply has multiplied by 4 times, right? We're making like a quarter of what we did in the year 2000, right? If you ever thought that you're producing so many more things and everything's going up and you're not enjoying your fair share of it, here it is, right? You are producing a lot more. That's why food is not going up by 4 times the price, right? Because technology has increased it maybe 3 times, the supply of food 3 times. Money has gone up 4 times, so your food is only going up 30%, right? But you're working that much harder and being more innovative, and you're not getting your share of the goods, right? Same thing with the home prices, right? The home in 2000 used to cost 163,000. Now it's 322,000. Hasn't caught up with the money supply rate, which kind of makes sense, right? You can usually buy a computer this year for a lot less than you paid last year, especially even without adjusting for inflation, and even more so if you adjust for inflation, right? A house is just like any other consumer good that you might want to use, right? For some reason, we thought of it as an investment, right? It's not really, unless you're getting some kind of income out of it, right? If you're living in it. But unfortunately, that's a big part of people's household assets, right? That's the unfortunate part of it, right? If people used homes like they use computers or cars or any other thing, this would be a good thing, right? Technology should make things cheaper in the long run, right? But there's a lot of speculation, unfortunately. Take a look at the number of bankruptcies. How is this measuring it? Is that like the running total, or? But whatever it is, right? 772,000. So our money is created when banks make a loan, right? Like I said, with your credit card, when you go to Walmart, Walmart gets to spend your credit card money right away, right? They don't wait until you pay your minimum payments and pay for 20 years, 30 years before they actually get the money, right? If they did, Walmart would be out of business, right? So a lot of our money is created by the banking system when they make a loan. The problem is that the banks, when they create imagine you borrowed the very first dollar into existence from the banks, right? But you promised the bank to pay 10% interest a year, right? Well, where's that other 10 cents going to come from for you to repay that debt? Well, at some point, right, you spend that dollar into circulation. At some point, you might try to earn it back somehow. You're not going to earn another 10 cents back if nobody else is borrowing, right? So the short answer is that somebody else has to borrow that 10 cents, right? And eventually, like a game of musical chairs, right? Somebody's going to get the short end of the stick and go bankrupt, right? And right now it's 772,000 a year, right? Out of a population of well, what's the well, I'll take the income taxpayers, right? 123 million adults or families at least, right? And out of those, right, 772,000. So about what percentage is that? About 0.5% of families on a given year, right? And you think about how long a career could last, right? 40 years or so. So 40 times 0.5%. So 20% of families will probably go bankrupt at some point, right? You probably know somebody who has gone bankrupt, right? There's a stigma attached to it, so you might not know they went bankrupt, but it's not nearly as uncommon. I read somewhere that bankruptcy is even more common than divorce. Okay. So unfortunately my camera puts a limit to how much I can record. I'll stop this video, and in the next video I'll talk about how we can measure some of our money supplies.